Hello everybody and welcome to the market review from forexlivetoday.com. Okay, straight into the charts. Here we have the S&P 500. As we can see this week, if I just zoom in, this week basically going nowhere. Flat, dojis, an up day, a down day, and another doji. So the bull run that we've been having, even though it has not had a lot of conviction behind it the whole way, really, it really seems to be petering out even more here. However, we've been saying this for quite some time now. All the fundamentals do not support such a high level on S&P 500, for example, or the Dow Jones, which is even at new highs, higher than 2011 highs. S&P 500 not quite as high, as you can see. Same with European markets. So cannot deny that it has been quite an impressive run from equity bulls. However, it remains to be seen how long it can be sustained. As you can see, really small ATR, average true range. You see these days how they don't go up very far. That means that the trading range for the entire day is not very big. So there's no impetus one way or the other. Everyone's kind of waiting to see what everyone else is going to do, and in the meantime it just grinds higher. So having said all that, let's look at our major currencies. Euro dollar, most heavily traded currency pair in the world, and its impressive reversal has continued. There were signs yesterday where I was thinking, on the hourly chart, that might be a lower high in, but at no point did I bet against the bulls, because as you can see, they have been extremely determined coming off this bottom after this breakout of this downward channel. Now, as we know, the European fundamentals are not great. Saying that, Italian 10-year bond yields are coming down. They're getting further away from the danger 7% level. But, for example, Portuguese 10-year bond yields are up at 15% or so. There's a lot of talk in the media at the moment about Portugal being the next Greece. Europe cannot have another Greece because all of the bailouts and summit resolutions are all based on the fact that Greece is a special case, extraordinary circumstances. So if other countries start, getting into the same situation as Greece, bad news for the euro. So at the moment, cautious with euro. The net short interest in this, that means the amount of speculators who are short this pair is at record highs. This can often result in a squeeze, so it can move up fast as it moves up, hits stops, which results obviously in more buys, which then gives it more strength, moves up, hits more stops, like that. So that's what they call a bear squeeze, and with such high short speculative interest, you've got to have some sort of reversal in either the price or in the short interest. So it's got to get closer together, those two levels. You can't have that divergence, going on and on and on. Just doesn't happen. So something to keep in mind there for the euro. But for now, there's no mistaking that in a short time frame, it's definitely in an uptrend. Dollar Swiss, I am still very, very interested in this pair, however have no position. We have to talk about Euro Swiss a little bit before we can talk about Dollar Swiss. Now, as we all know, the Swiss National Bank has decided that the Swiss franc should be at the 120 level for Euro Swiss. and they have said that they will defend that 120 level with unlimited amounts of capital. Therefore, you can pretty much take the Swiss National Bank at their word, because they have the resources, and in the past they have been shown that they will back up what their statements, unlike the Bank of Japan, for example. Now, what does that mean? Well, the Euro Swiss, the level is 120.50. So it has come off its highs and it is down very close to the 120 level. So what does that mean for dollar Swiss? Well, you can see here what it meant the first time when Swiss National Bank intervened. So since then we've grinded up, come back down. Now, the closer that gets to the 120 level on Euro Swiss, if they intervene again, obviously, as well as buying euros, they will be buying US dollars, which will move this up. So a long position here at some point is going to be a good trade. The trick to it is just getting the timing right. So pay very careful attention to any comments, headlines that you see. Check the Forex Live Today website, updated news every hour. Look for Swiss National Bank statements, anything that'll give you a clue. Alright, moving on to cable. Now, on the website, we detailed a trade. We gave it to you. The trade was long after this candle, this outside day here, as long as we had a green candle the next day and we stayed above this major support level. Well, we had a green candle, and discounting this Sunday here, we have had 10 green candles in a row. Now, the last time that happened, I have no idea, but I know it happens not very often. So, as was updated on the website, we exited this trade on Thursday, purely because it's so overbought at the moment that it's going to have to retrace at some stage. We never expected it would go on so long, to be honest. We're at resistance here. You can see resistance point here, so it was time to get out with our over 300 pips profit. For now, you would you'll be waiting, would be my advice, but this is a very strong trend. The bulls really have some momentum. Now, we've been noticing a bit of a trend here with the dollar pairs, and it all comes back to I guess the really long-term trend that the dollar is weakening. It has been weakening for a long time. But we did have a correction before Christmas, since August. Now, people were calling it a reversal, and even I was weighing into that argument there, but with the latest Fed and FOMC statements and looking at their monetary policy going forward, keeping interest rates low until 2014, it looks like the dollar will continue its downward trend into this year, into the foreseeable future. So something to keep in mind. Dollar yen, another very interesting one. Again, a pair that is at risk of intervention. However, as I mentioned earlier, the Bank of Japan not so forthcoming with their heavy-handed approach to intervention. They do intervene, as you can see here, and as you may have seen this week here, but as you can see, they're far less effective than the Swiss. Now, this week's price action was extremely interesting because we've had weeks and weeks of very small range trading, nothing. All of a sudden we have a big green candle. The next day, which was Wednesday, it moved right up to the top of this range and was immediately sold all the way back down to the bottom of this range, straight away. So you can see by the lines I've put there, a clear trading range happening at the moment. So take from this what you will, but it looks pretty obvious to me. Finally, the Aussie dollar Now, this was another one that we had some good luck with this week. Now, the Aussie dollar is interesting because as the global markets have kind of stalled out, especially this week, haven't really gone anywhere. That's risk trends, S&P 500, Dow Jones, FTSE 100, the Nikkei, for example. Usually the Australian dollar is quite closely correlated to these markets. However, going back to what I've been saying about the US dollar being so weak, again it has helped the Aussie dollar continue to move north, getting to some new highs once again, starting to come up to test this 1750 level very shortly. I've been thinking actually, what is it about the Australian dollar that is making it so strong? There is negative interest rate forecasts for the next 12 months. It must be just the fact that the interest rates in Australia at the moment are so much higher than the rest of the world, and even with the negative forecast, people are still very keen to get their hands on Australian dollars, Australian government bonds, which is causing the strength. However, if we do see that big risk aversion move that is being threatened by this tapering of the bullish trend, by this curve here, if that really starts to gather momentum to the downside, then you will see the Australian dollar come off. So that's where we stand as of Saturday, the 28th of January. Have a great week trading next week. Don't look for too long-term trades at the moment until there is some more clarity in a lot of areas, the US and Europe especially. Bye for now.